Based on the historical data and forecast, Bitcoin has shown a fluctuating trend with a recent upward momentum. The price has tested the resistance level of 74,700 and bounced back, indicating potential for further upside. The RSI is currently around 59.2, suggesting the asset is not yet overbought. Considering the forecast prices, which remain relatively stable around 73,000 to 74,500, I recommend a long position. The entry price will be $72,800. The stop loss should be set slightly below the recent support level at $68,100 to protect against a potential downside reversal. The target price will be $74,500, aligning with the forecast high and previous resistance. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the upper band, suggesting a potential pullback. However, the forecast indicates continued upward pressure. Therefore, I propose a portfolio with a 60% allocation to the long position described above, and a 40% allocation to a short-term strategy capitalizing on potential pullbacks. For the short-term strategy, enter a short position at $73,700, with a stop loss at $74,300 and a target price at $72,800. This dual approach aims to maximize returns while mitigating risk by leveraging both upward and sideways price movements. Based on the historical data and forecast, Ethereum shows a strong upward trend. The price has consistently moved above the support level of $2,050, and the forecast indicates continued price increases. The RSI values, while fluctuating, have generally been trending upward, with a recent peak above 66.3, suggesting bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for price expansion. Considering these factors, I recommend a long position strategy. We will enter a long position when the price retraces slightly, aiming for an entry price of $2,280. A stop loss should be placed just below the support level at $2,050 to limit potential losses. The target price for this trade will be $2,480, aligning with the upper end of the forecast range and the recent resistance levels. We will use a combination of RSI and Bollinger Bands to manage this position. If the RSI reaches an overbought level of 80, we will consider taking partial profits or tightening the stop loss. Additionally, if the price touches the upper Bollinger Band, it signals a potential reversal, and we will re-evaluate the trade. This strategy combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP demonstrates a clear upward trend. The price has consistently recovered from the support level of $1.49, and the forecast indicates a continued climb towards $1.61. Utilizing the RSI, we can identify potential entry points. Currently, the RSI is at 60.3, which is approaching the overbought territory of 80. Therefore, I suggest a strategy that incorporates both RSI and Bollinger Bands. We will initiate a long position when the price touches the lower band of the Bollinger Bands, indicating a potential oversold condition. The entry price will be $1.29. To manage risk, the stop loss will be set just below the lower band at $1.28. The initial target price will be the resistance level of $1.54, offering a reasonable profit margin. To maximize returns, we will implement a trailing stop loss strategy. Once the price reaches $1.54, we will adjust the stop loss to $1.49, securing a portion of the profits. If the price continues to climb, we will further adjust the stop loss to the center of the Bollinger Bands, which is currently around $1.4. The final target price will be the forecasted peak of $1.61. This portfolio combines the strengths of RSI and Bollinger Bands, providing a robust strategy for capitalizing on the upward trend of XRP while effectively managing risk. The strategy aims for high returns with a disciplined approach to entry, stop loss, and target prices. Based on the historical data and forecast, BNB shows a slight upward trend. The price has been fluctuating between a support of $650 and a resistance of $678. The RSI is currently around 55.6, indicating a neutral position, not overbought or oversold. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback is possible. Considering these factors, I recommend a cautious long position strategy. My strategy is to enter a long position at $655. Given the recent price action and the RSI near neutral, I will place a stop-loss order at $647 to limit potential losses. The initial target price will be $663, aligning with the forecast for March 18, 2026. If the price breaks through the $663 target, I will adjust the stop-loss to break even to protect profits and potentially extend the target to $668. This strategy combines trend analysis, RSI indicators, and Bollinger Bands to manage risk and maximize potential returns. Based on the historical data and forecast, Solana exhibits an upward trend, supported by consistently increasing close prices and forecast values. The RSI values have been fluctuating but generally trending upwards, indicating increasing buying pressure. The Bollinger Bands show that the price has been oscillating within the bands, but the recent movement suggests a potential breakout. Considering these factors, I recommend a long position strategy. We will enter a long position at $93.9, with a stop-loss placed at $91.5 to limit potential losses. The initial target price will be $98.7, aligning with the forecast for March 21, 2026. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 40, indicating an oversold condition, we'll consider entering a long position. Conversely, if the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price reaches $98.7, we'll move the stop-loss to the break-even point, $93.9, to secure profits. If the price continues to rise, we'll set a secondary target at $99.8, based on the forecast for March 24, 2026. This combined approach leverages multiple technical indicators for a more robust and adaptive investment strategy. Based on the historical data and forecast, TRON exhibits an overall upward trend. The RSI consistently moves above 50, indicating positive momentum, and the forecast prices predict continued growth. The support price remains stable at $0.298, while the resistance fluctuates, recently nearing $0.319. Considering these factors, I propose a long position strategy. We will enter a long position at $0.305, placing a stop-loss order at $0.298 to limit potential losses. The initial target price will be $0.321, aiming to capitalize on the predicted upward movement. To refine the strategy, we will incorporate Bollinger Bands. The price consistently trades within the bands, suggesting periods of consolidation and breakout potential. If the price touches the lower band, indicating an oversold condition, we will consider entering a long position at $0.275. The stop-loss will be set at $0.268, and the target price will be $0.295. Conversely, if the price reaches the upper band, signaling an overbought condition, we will consider taking profits or waiting for a pullback before re-entering a long position. The final portfolio will prioritize the long position at $0.305 with a stop-loss at $0.298 and a target price at $0.321 as the primary strategy, supplemented by opportunistic entries based on Bollinger Band signals. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The price has been fluctuating within a defined range, with support around $0.0982 and resistance around $0.101. The RSI indicates that the asset is currently approaching overbought territory, with a value of 54.6 on March 17, 2026. However, the forecast predicts a price of $0.1 on March 18, 2026, followed by a slight pullback. Considering the Bollinger Bands, the price is nearing the upper band, suggesting a potential pullback or consolidation. Therefore, I propose a strategy focusing on short-term gains, capitalizing on the predicted pullback. I recommend a long position entry at $0.1 on March 18, 2026. Given the RSI approaching overbought and the price near the upper Bollinger Band, a tight stop-loss is crucial. Set a stop-loss at $0.098 to protect against a sudden downturn. The initial target price should be $0.103, aligning with the upper Bollinger Band and a conservative profit target. If the price breaks through $0.103, consider adjusting the stop loss to break even and extending the target price to $0.105. This strategy combines the momentum from the forecast with risk management through the stop loss and profit targets, aiming for a quick profit while minimizing potential losses. Based on the historical data and forecast, Cardano exhibits a clear upward trend, consistently bouncing off the support price of $0.273 and approaching the resistance level of $0.29. The RSI readings have been fluctuating, but recently showing an increase, indicating strengthening buying pressure. The Bollinger Bands show that the price is currently approaching the upper band, suggesting a potential for a short-term pullback. Considering these factors, I recommend a long position with an entry price of $0.283 on March 18, 2026. To manage risk, set a stop loss at $0.278, slightly below the center of the Bollinger Bands, which acts as a dynamic support level. For the target price, I anticipate a move towards the resistance level of $0.29, providing a reasonable profit target. However, given the potential for a short-term pullback, I suggest a more conservative target of $0.298, aligning with the forecast price on March 22, 2026. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while minimizing risk. The portfolio will be 60% long Cardano and 40% in cash to allow for flexibility and potential re-entry opportunities if the price retraces favorably. Based on the historical data and forecast, Bitcoin Cash shows a downtrend, with the RSI consistently below 50, indicating a relatively weak momentum. The recent price action has been fluctuating within a range, bouncing off the support level of $444. The forecast for the next week suggests continued sideways movement, with prices hovering around $463 to $468. Considering the oversold RSI levels, around 34 to 39, I recommend a long position with a conservative approach. Entry price will be $463, with a stop loss set at $444, just below the established support level. The target price will be $477, aiming for a modest profit based on the recent high. To enhance the strategy, we will incorporate the Bollinger Bands. The price is currently trading near the middle band, indicating a potential for a short-term bounce. However, given the overall downtrend, we will maintain a tight stop loss. We will use a combination of RSI and Bollinger Bands to fine-tune the entry and exit points. If the RSI moves above 40 and the price touches the upper band, we will consider taking profit at $477. This blended strategy aims to capitalize on short-term fluctuations while mitigating risk in a bearish market. Based on the historical data and forecast, Chainlink shows a clear upward trend, bouncing off the support price of $9.34 and approaching the resistance of $9.92. The RSI indicator fluctuates between 42.9 and 62.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I recommend a long position strategy. We will enter a long position at $9.63, coinciding with the forecast price on March 19, 2026. The stop loss will be set at $9.34, the established support level, to protect against a potential downside reversal. The initial target price will be $9.92, the resistance level, aiming for a quick profit. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI falls below 20, oversold, while the price is near the bottom of the Bollinger Bands, we'll consider entering a long position. Conversely, if the RSI exceeds 80, overbought, while the price approaches the upper Bollinger Band, we might consider exiting the position or tightening the stop loss. For this initial entry, however, we will prioritize the upward trend and the forecast price. The target price will be adjusted based on the market momentum. If the price breaks through $9.92, we'll raise the target to $10.1, capitalizing on the potential for further gains. This dynamic approach, combining trend analysis, technical indicators, and forecast data, should yield high returns while managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations between the support of $1.31 and the resistance of $1.45. The RSI fluctuates around 45 to 52, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been oscillating within the bands, suggesting moderate volatility. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 40, aiming to capitalize on potential rebounds towards the resistance level of $1.45. The entry price will be $1.31, with a stop loss set at $1.28 to limit potential losses. The target price is $1.45, offering a substantial profit margin. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, which is around $1.23, it signals a potential oversold condition, triggering a long position at $1.28. The stop loss will remain at $1.25, and the target price will be $1.45. The forecast data suggests a price range between $1.32 and $1.34 for the next week, indicating a stable environment for this strategy. Combining the RSI and Bollinger Bands, the most efficient portfolio will be to enter a long position at $1.28, set a stop loss at $1.25, and target $1.45. This approach balances risk and reward, leveraging both technical indicators for informed decision-making. Based on the historical data and forecast, ZKsync shows a slight upward trend. The RSI consistently remains below 80, indicating that the asset is not overbought. However, it dipped below 30 on several days, suggesting potential oversold conditions. The Bollinger Bands have been narrowing recently, which could signal a breakout. Considering the support price of $0.0204 and the forecast prices trending upwards, I recommend a long position strategy. We will enter a long position at $0.0204. Given the recent price action and the support level, a stop-loss order should be placed at $0.018 to limit potential losses. The initial target price will be $0.0231, coinciding with the resistance level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI drops below 30, indicating an oversold condition, we will enter a long position at $0.0204. The stop loss will remain at $0.018. If the price breaks above the upper Bollinger Band, it suggests a strong upward momentum, and we will adjust the target price to $0.024. Conversely, if the price touches the lower Bollinger Band, it might indicate a temporary pullback, and we will consider tightening the stop loss to $0.019. This dynamic approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a strong uptrend. The price has been consistently rising from March 4, 2026, reaching $0.242 on March 17, 2026. The forecast for the next week indicates further price increases, potentially reaching $0.261. The RSI has crossed above 50, indicating a bullish momentum, and the price is currently near the upper Bollinger Band, suggesting continued upward movement. Therefore, I recommend a long position with an entry price of $0.209. A stop loss should be set at $0.197 to protect against a potential pullback, and a target price of $0.261 should be set to capitalize on the projected price increase. To refine this strategy, I will incorporate RSI and Bollinger Bands indicators. When the RSI falls below 35, it indicates an oversold condition, suggesting a potential buying opportunity. Conversely, when the RSI exceeds 65, it signals an overbought condition, indicating a possible selling point. Considering the Bollinger Bands, when the price touches the lower band, it signifies a potential buying opportunity, while touching the upper band suggests a possible selling point. Combining these signals, I suggest entering a long position at $0.209, placing a stop loss at $0.197, and setting a target price at $0.261. This portfolio combines the trend analysis, RSI, and Bollinger Bands to optimize returns and manage risk effectively. Based on the historical data and forecast, Quant exhibits a clear uptrend, supported by consistently increasing close prices and forecast values. The RSI consistently moves above 40, indicating bullish momentum, with values nearing 63.0 on March 17, 2026. Considering the current RSI and Bollinger Bands, I recommend a long position. The entry price should be $68.8, aligning with the forecast price for March 18, 2026. To manage risk, set a stop loss at $65.2, just below the established support level. The target price should be $74.5, based on the forecast price for March 24, 2026, providing a significant potential return. To refine the strategy, we'll incorporate Bollinger Bands analysis. The price is currently near the center band, suggesting a potential breakout. A breach of the upper Bollinger Band could signal further upward movement. Therefore, if the price reaches $69.5, consider adding to the position. If the price falls below the lower Bollinger Band, which is around $60.2, it would be a signal to exit the position. This layered approach, combined with the RSI and support/resistance levels, aims to maximize returns while mitigating potential losses, creating a robust investment portfolio. Based on the historical data and forecast, just shows a clear upward trend. The price has consistently made higher highs and higher lows, supported by the Bollinger Bands which are widening, indicating increasing volatility and momentum. The RSI has generally been above 50, suggesting bullish sentiment, and although it briefly touched overbought levels, it has not sustained above 80. Considering the forecast for the next week, the price is expected to continue its upward trajectory, reaching $0.0592. Therefore, I recommend a long position with an entry price of $0.0554. The stop loss should be placed slightly below the recent support level at $0.0526, setting it at $0.052 to minimize risk. The initial target price can be set at $0.058, based on the forecast and the resistance level. To refine the strategy, we will incorporate an RSI-based trailing stop. If the RSI falls below 60, we will adjust the stop loss to the recent swing low. If the RSI reaches 80, we will consider taking partial profits at $0.0588 and move the stop loss to break even. This dynamic approach will allow us to capture substantial gains while protecting against potential reversals. The final target price is $0.0592 based on the forecast. This combined strategy leverages the upward trend, Bollinger Bands expansion, and RSI signals to maximize returns while managing risk effectively. Based on the historical data and forecast, Walrus demonstrates a clear upward trend. The price has been consistently moving towards the resistance level of $0.12. The RSI indicates that the asset is currently in a moderately bullish zone, fluctuating between 44.7 and 65.8. The forecast for the next week shows a continued upward trajectory, with prices predicted to reach $0.0952. Considering the current trend and forecast, I recommend a long position. Entry price should be set at $0.0862, coinciding with the first forecast price. A stop-loss order should be placed at $0.08, just below the support level, to mitigate potential losses. The initial target price is $0.0919, aligning with the forecast price for March 23, 2026. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been trending towards the upper band, indicating bullish momentum. If the price breaks above the upper band, $0.0876, we should consider raising the target price to $0.0952. Conversely, if the price approaches the lower band, $0.0696, we should tighten the stop loss to $0.075. This dynamic adjustment, combined with the RSI and forecast data, aims to maximize potential returns while minimizing risk. The final portfolio will be 70% long position and 30% cash. Based on the historical data and forecast, LayerZero shows a clear upward trend. The price has consistently bounced off the support level of $2.11, and the forecast indicates continued growth with prices reaching $2.55 within the next week. The RSI consistently fluctuating around 60, indicating neither overbought nor oversold conditions. The Bollinger Bands are widening, suggesting increasing volatility and potential for significant price movements. Considering these factors, I propose a long position strategy. We will enter at $2.28, just as the forecast begins. A stop loss will be placed at $2.11, right at the established support level, to protect against unexpected downturns. The initial target price will be $2.49, aligning with the forecast peak for the week. To maximize potential returns and manage risk, I recommend a tiered target approach. After reaching $2.49, we will move the stop loss to break even at $2.28. If the price continues to rise, a secondary target of $2.55 will be set. This strategy combines the upward trend, forecast data, and technical indicators to create a high probability, high reward opportunity. This approach allows us to capitalize on the expected price increase while mitigating potential losses with well-defined stop-loss levels. The RSI readings suggest we are not in overbought territory, allowing for further upside potential. Based on the historical data and forecast, SUN token shows a clear upward trend. The RSI consistently fluctuated between 40 and 63, indicating neither strong overbought nor oversold conditions. However, the forecast data projects a continued rise, with prices expected to reach $0.018. Considering the Bollinger Bands, the price has been trending towards the upper band, suggesting bullish momentum. Therefore, I recommend a long position strategy. We will enter a long position at $0.017, coinciding with the support level and the start of the forecast period. To mitigate risk, set a stop-loss order at $0.0158, just below the recent low. A reasonable target price would be $0.018, aligning with the forecast high and providing a potential 6.25% gain. To refine this strategy, we can incorporate RSI signals. If the RSI falls below 20, consider a long entry at the subsequent bounce. Conversely, if the RSI reaches 80, consider taking profits or tightening the stop-loss. Combining these signals with the Bollinger Bands, we can further optimize our entries and exits. For instance, entering when the price touches the lower band and the RSI is low, and exiting when the price touches the upper band or the RSI is high. The final portfolio will prioritize the long position with an entry price of $0.017, a stop loss of $0.0158, and a target price of $0.018, regularly adjusting based on RSI and Bollinger Band signals. Based on the historical data and forecast, TRON exhibits an overall upward trend. The RSI consistently moves above 50, indicating positive momentum, and the forecast prices predict continued growth. The support price remains stable at $0.298, while the resistance fluctuates, recently nearing $0.319. Considering these factors, I propose a long position strategy. We will enter a long position at $0.305, placing a stop-loss order at $0.298 to limit potential losses. The initial target price will be $0.321, aiming to capitalize on the predicted upward movement. To refine the strategy, we will incorporate Bollinger Bands. The price consistently trades within the bands, suggesting periods of consolidation and breakout potential. If the price touches the lower band, indicating an oversold condition, we will consider entering a long position at $0.275. The stop loss will be set at $0.268, and the target price will be $0.295. Conversely, if the price reaches the upper band, signaling an overbought condition, we will consider taking profits or waiting for a pullback before re-entering a long position. The final portfolio will prioritize the long position at $0.305 with a stop loss at $0.298 and a target price at $0.321 as the primary strategy, supplemented by opportunistic entries based on Bollinger Band signals. Based on the historical data and forecast, DeXe shows a strong upward trend. The price has consistently tested and broken through resistance levels, with the RSI consistently above 60, indicating bullish momentum. The forecast for the next week predicts continued upward movement, with prices reaching $6.17. Considering the RSI and Bollinger Bands, we will implement a combined strategy. The RSI suggests buying opportunities when the price dips towards the lower Bollinger Band, while the forecast and overall trend support a long position. Therefore, we will enter a long position at $5.27. To manage risk, we will set a stop loss at $5.15, just below the recent low of the Bollinger Band. Our initial target price will be $6.07, aligning with the forecast high for the week. To maximize returns, we will implement a trailing stop-loss strategy. Once the price reaches $6.07, we will move our stop-loss to $5.74, securing a portion of the profit while allowing the trade to continue if the upward trend persists. Further, if the price continues to rise and reaches $6.17, we will move our stop-loss to $5.82. This adaptive approach will protect profits and capture further gains. The portfolio will be 80% allocated to this long position on DeXe, with the remaining 20% held in cash to manage potential volatility and capitalize on future opportunities. This strategy balances risk and reward, aiming for high returns within a well-defined risk management framework.